Were you a W-2 employee and now you have the opportunity to go 1099 and do some contract work? It can be very exciting, but also very confusing at the same time. This episode is all about what you need to know before heading down the consulting route. Enjoy it. We hope you've been enjoying all the episodes from the Secure Your Retirement podcast. If you'd like to keep learning and receiving these episodes, then hit the subscribe button and turn on notifications by hitting the bell so you receive alerts when each episode comes out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in. Welcome back to the Secure Your Retirement podcast, and thanks for tuning in today on this happy Monday. I've got a great guest here with me. So before I go in and tell you what this episode's all about, I just want to, for those of you who haven't met Taylor Wolverton on our team, introduce you to her. And for those of you that have met her or spoken with her or heard her on this podcast before, you know you're in for a good episode. So Taylor, thank you for being here today with me.
Yeah, thanks for having me.
So Taylor on our team, she is the director of financial planning and tax strategy. And we sit here almost mid-year, and so we've just finished up financial planning strategy meetings with the families that we serve, and now Taylor's kind of gearing up for tax strategy meetings for pretty much the remainder of the year. And we've talked a lot about what a tax strategy meeting is, but you know, sometimes, well, I would say quite commonly, we see a scenario, and this is what the episode's about today, is we see a scenario of someone working a job, and in most scenarios, that's a W-2 type of job where your salary is paid, your income comes in, the taxes are taken out for you. A lot of it's just done for you. The company is running a lot of things, so you can just be focused on your role within the company. Um, but what happens from time to time is either you leave that job and you want to go start something else, maybe go be self-employed, or you have an opportunity to consult in your field and generate income without being associated necessarily with the company that you're working with. So you go from this thing called a W-2 type of employee to generating a 1099 tax document to report your income. And while that is a big shift, a lot of times we get questions around, well, how does this work? What do you need to know before you head down this consulting route? Being here in the Raleigh area, we've got a lot of tech companies, we've got a lot of pharmaceutical companies. So it's quite often that we see people leave and then, as part of their semi-retirement, they go back and consult. And it becomes a brand new thing for them because what they start to learn is that they have to think more than just about the job that they're doing, but also how they structure their taxation, how they structure potentially business entities, how they pay their tax, and all that stuff. So I said, hey, Taylor, can we just talk this through so that people have at a high level what to expect if they have this opportunity coming their way? So, Taylor, I say we just dive in and, take that person that's going from W-2, forget about what the opportunity is, but just assume that they have an opportunity that's going to create a 1099 for them, and maybe explain what a 1099 is. And then let's talk about, what changes should they be anticipating as they transition into this world.
Yes, as a 1099 contractor or consultant, whatever you want to call it, you're now considered self-employed. So that means you are both your own employer and employee. You get both sides of the equation now, which does mean you're responsible to pay your own taxes, federal taxes, state taxes, and self-employment taxes. Compare that to when you're a W-2 employee, your employer takes care of a lot of that, but now you are the employer, so now that's your responsibility to make sure you're keeping on track with all those tax obligations and considerations like setting up liability protections for yourself, thinking through the benefits that you may lose from your W-2 employer to now going to self-employment, things like your health insurance and your retirement savings contributions, and just preparing yourself for maybe some less consistent income. It might vary. You're probably used to that consistent every other week or twice a month paycheck, but now when you're self-employed, Maybe you earn more at the beginning of the year and then you have a slow season, maybe more at the end of the year. It's just going to be a little varied as far as when and how you're receiving that income. So, just some things to kind of prepare yourself for and think through before you dive in.
Yeah, I know that when we have that client that was a W-2 and then they transition into contract work and we sit with back down with them, a year or two later and have the conversation of how's it going and they oftentimes what I hear is I didn't realize how much my employer did for me. When I was working for them. So if you think about, the 401k plans, the taxes coming out of your paycheck, all these different benefits, when you go down the contract route, yes, sometimes your pay, your hourly rate or your value seems higher and it feels like you can make a lot more money in the contract space, but what we sometimes forget is that there are a lot of things that the employer is covering for you that's also part of compensation too. So I think this is a great episode, a timely one too, with a lot of just things happening in the economy and everything like that, and job changes happening all over the place. So, one that we get all the time though, Taylor, is around this idea of setting up an LLC. I'm a contractor now. Of course, I'm going to need a business entity, and let me go set up an LLC. And so I know there's a lot of misconceptions around what an LLC is for, what are the benefits of. So could you just kind of walk us through if someone's in that boat of considering setting it up, what should they be thinking about and what's going to come with it and what's not going to come with it?
Yes, yeah, we do get this question a lot. Should I set up an LLC? I think the most common misconception is that having an LLC somehow changes the way you pay your taxes when you're self-employed. And that is not the case. An LLC is a legal structure, but it is not a tax strategy. Setting up an LLC alone does not change the way you pay your taxes or the way that your self-employment income is taxed at all. All that an LLC does is separate you and your personal assets from your business assets. So the benefit truly of having an LLC is, let's say, for example, you get sued, your business gets sued. You have an LLC. Now that protects your personal assets like your home and your car and your savings account from creditors that would otherwise try to collect on your personal assets in order to cover the lawsuit through your business. So an LLC offers you liability protection, protects your personal assets from your business, and sets up that separation between business and personal assets. But again, does not change your taxation whatsoever.
Right. Yeah. And I know that's the big one is that people think that if we set up an LLC, we have all these abilities and doors that open up for us. And the fact of the matter is it's really once you are a contractor, that's where the door opens for you for certain types of tax things that you can be thinking about. But the LLC, so LLC stands for Limited Liability Company. And there's different ways that you can set up your LLC. We're not going to go into all of that today, but it's just to create that distinction of an LLC is gonna shield you a little bit if something in your business was to go wrong. It's going to protect your personal assets to a degree, hence the limited liability. Uh, well, it wouldn't be fair if we did this episode without getting a little bit deeper into taxes when I have Taylor Wolverton on the line. So let's talk some about the taxes and, comparing W-2 to going into this 1099 world. How does all this stuff work?
Yes. Okay. So if you're self-employed and you are the only owner, you don't have any other like employees or there's not like a partner involved in this, which I think is most common among our clients. They're just, doing the consulting on their own. But all of your consulting income or your 1099 income is reported on your own personal tax return. Fortunately, it does not mean you need to file a separate business tax return. It all just gets added to your own personal tax return on a Schedule C, is what it's called. And on that Schedule C, all of your self-employment income is reported and all of your expenses are reported. We'll get into more detail on some of those expenses to be aware of. But once all that information is tracked, that shows your net self-employment income. And based on that net self-employment income after your tax or after your expenses are subtracted out, you will have a calculation take place to show your liability for federal tax, state tax, and also self-employment tax. For your W-2 income, when you're an employee of somebody else's business, you pay federal tax and state tax. That's normal. But the self-employment tax is really the newer piece that you will experience when you transition to self-employment. And the self-employment tax, there's a few different names, but it all means the same thing. Sometimes you'll hear it called FICA tax. Sometimes you'll hear it called payroll tax. Sometimes it's called Social Security and Medicare tax. Those are actually all the same, different names for all the same thing. So the two, the calculation that's really taking place is Social Security tax is 6.2% of your net self-employment income. And then Medicare tax is 1.45% of your net self-employment income. When you are an employee, a W-2 employee of someone else's business, you actually still pay this tax, but it just happens automatically. It comes out of your paycheck. You don't even know what's happening necessarily. You don't see it. You don't have to do anything about it. It just happens and it's done with. But now, when you're self-employed, it's your responsibility to pay that. And also, the other piece that's important to know is that you pay so total Social Security and Medicare is 7.65%. You pay 7.65% as an employee and 7.65% as an employer. So both halves, employee and employer, FICA or payroll or self-employment tax, whatever you want to call it, is there's an additional 15.3% tax that you will pay when you file your tax return and to be aware of. So that's kind of the extra not so fun thing that is taking place and the calculations taking place on your tax return to be aware of is that self-employment tax you're responsible for.
Right. So yeah, another thing that kind of gets realized is that going back to the employer in a W-2 world, taking care of a lot of those things, they are paying
Yeah.
some of those taxes for you. So, Taylor, when you said FICA, my head went to I used to watch, well, I still do watch Friends, the sitcom show a lot, and I remember when Rachel, I think it was Rachel, got her first job at the coffee shop, and she gets her first paycheck expecting a big paycheck, and then she sees this thing and she sees the line by line of all the deductions taken out, and she goes and she cusses, but she basically says, "Who the heck is FICA and why are they taking all my money?" And so
Yep.
that's exactly it. When you go into the 1099 world, you become very aware of all these different taxes that you kind of overlook when you're in the W-2 space.
Yes. It's a
Did we
little
talk?
more painful because it's more visible to you when you're self-employed. Yeah.
Right, exactly. And also, I don't, did we talk about how the taxes, did you mention how the taxes are paid?
No,
In
I
normal
can add
scenarios
that.
in your W-2, it's just withheld from your paycheck bi-weekly, and then that adds up and that adds up. And in most cases, come April tax time, you're either getting a refund or you're owing a little bit of money, but you're paying along the way without almost realizing that you're paying along the way. So how does it work
hmm
in the self-employment space, contract space, when it comes to actually paying those taxes once you figure out all this FICA and all this stuff?
Yes, yeah, exactly. When you're a W-2 employee, you're working for somebody else, they automatically set that up for you. They pay federal tax for you, they pay state tax for you, they pay the FICA payroll tax for you. They send it to where it needs to go. You don't really see it, you don't really think about it too much, and then you file your tax return and all of that information gets reconciled and you're done. When you're self-employed, you need to take a little more action to make sure the taxes get where they need to go. So for one, you need to be paying your federal tax that is gets paid to the IRS. You can either mail a check or make a payment online. Same with FICA or payroll tax, self-employment tax. You also pay those to the IRS either through mailing a check or online. And then your state tax you pay to the state. Same way, you can mail a check to the state or pay online. And the timing to do that is best to spread it out at least quarterly. You can pay at whatever frequency works for your cash flow situation. But the IRS does expect that you pay your taxes as you earn your income. So to spread it evenly throughout the year, They have quarterly deadlines or due dates to make those estimated tax payments. The first one is April 15th. The next one is June 15th, September 15th, and then the final quarter deadline is January 15th of the following year. So for your 2026 estimated tax payments, you would be paying your federal FICA or self-employment and state tax for the last quarter on January 15th, 2027. So those are important dates to keep in mind and be aware of and have some sort of thought process around, okay, I need to set aside this much from my income to be prepared for that next quarterly deadline and pay federal, self-employment, and state tax so you know it's coming and you're not shocked.
Right. Yeah. The biggest thing I could say, and this is just from seeing it happen over the years, and even when I was younger, I coached a lot of different sports, and you've got younger kids that are paid as contractors, as 1099s, whether they work at camps or they're babysitters or summer jobs, odd jobs, random things that get paid 1099. And they think all of that money is theirs, where in fact it's not always the case. And so realizing that big check that you get, whatever that is it's a gross amount and nothing's been withheld from it yet, and it's your job to properly withhold and pay those taxes. Once you get the hang of it though, and you understand the contract space, it can be a pretty cool space. There's a lot of flexibility there. You get to run your own business to a degree, and then there are some things that you can do to help with your taxation a little bit, and that's where your deductions come in that are available in this space, whereas they're not as available in the W-2 space. So let's talk about
Yes.
some of those deductions, Taylor.
Yeah, so the good news is, after talking about the less good news of having to pay your self-employment tax, the good news is when you are self-employed, you can deduct or write off a lot of the expenses that you incur through keeping your business going. So one thing that is important is to have some sort of separation between your business income and expenses and your personal expenses. So a lot of times when is you set up your own business checking and savings account. You can set it up the same credit union you have your personal checking and savings account, but just to be receiving all of your business income in one account and be paying all of your business expenses out of one account. Just easier for you to keep track of. And when it does come time to file your tax return, you can just look back at all of those statements and see an easier recorded history of your income and expenses because that information needs to transfer to your tax return. Same for if you want to use like one business credit card or have a couple business credit cards to pay all of your business expenses. You can pull a credit card statement and see all of your business expenses rather than having to sort through your personal credit card and figure out what was I paying for my personal life? What was I paying for my business life? You don't want to have to go through all that extra time and trouble at tax preparation. So get separate business bank accounts and credit cards.
Yeah.
For expenses that you can write off, like I said, all the IRS is that an expense is deductible if it's incurred in the ordinary and necessary way of carrying on your trade or business. So a lot of times that's like software subscriptions if you're using those for consulting, using your cell phone, the business use of your cell phone, travel, meals if you're meeting with clients, if you're using your car, like a lot of realtors, you're driving to different showings, you can use some of those expenses and track your mileage on your car. If you're buying office supplies or office furniture, equipment, if you have personal development or education classes that you're taking, things like that, your business insurance, if you need E&O insurance, legal fees, fees for setting up your LLC, things like that, anything associated with your business you want to keep track of to report that on your tax return. The benefit is that all of your expenses are going to reduce all of those tax liabilities that you need to pay, federal tax, state tax, and self-employment tax. So as many expenses as we can report on that tax return is going to reduce the amount of taxes that you pay over time.
Yeah, and I would add a word of as many legitimate expenses as we can
Legitimate.
report as
Yes, yes, yes.
possible, because there's a lot of gray in this space, and The common one is buying a car and writing it off fully. There's a lot of rules around that type of stuff that you need, and just the deductions in general. There's limitations. There's percentages of different types
Yeah,
of income, and a whole different space that we can't really cover today. But the biggest thing is that I would hear, or when people would say, "Yeah, I just wrote off the car. I just wrote off the boat." Right? Those can tend to be red flags, and you're not getting it for free. You're still having to pay the money to buy it. You just get a tax benefit for it. And it can be done
exactly.
legitimately, but you're still shelling out the cash. So, when it comes to, especially if you're in your first year, if you're transitioning from W-2 to 1099 to contract work, and it's a brand new world for you, you got two real options. One is that you go self-research it all yourself, set up whatever entity you think makes sense for your new business structure, and then figure out all the tax rules, or you work with a qualified CPA that can help you at least get it started and then give you things to think about, and kind of set you up for success rather than trying to or making mistakes up front and then trying to figure it out, which could potentially lead to penalties and audits and things that you definitely don't want to go into. But Taylor, is there anything that we've missed here that you wanna add or close us out on in this whole idea of 1099 contract work?
Yeah, one other thing I just wanted to say a little bit more on as far as expenses too, because I talk about this a lot with our clients who are self-employed, is the use of a home office. A lot of the times, if you are consulting or whatever your self-employment venture is going to be, you are working from home. And when you're a W-2 employee, you do not get any benefit from working from home. But when you are self-employed, you can use expenses from maintaining your home and having an office space in your home to offset some of that self-employment income. And again, eventually reduce your taxes, of course, is the goal. So in order to use a or to deduct expenses for your home office, you have to have a space in your home that is used regularly and exclusively for your business. So if your business desk is also your dining table,
Hmm.
that's not going to qualify as a home office. Or if your office is also the guest bedroom, that's not going to qualify as a home office. It has to be exclusively where you work from for your self-employment. Some things to keep track of are the square footage of the space that you're using in comparison to the square footage of your home. And then also to think about all the expenses that you're using to maintain your home, like even your mortgage interest, or if you're paying rent, property tax, homeowners insurance, utilities, internet, HOA fees, if that applies, even indirect expenses like repairing the roof on your home. Some of your roof is going to cover your home office, so we can use some of that expense in proportion to whatever the home office space is in comparison to your whole home, or things like getting new flooring in just the office space. So things like that can also be important to keep track of. You may not think of that as a direct business expense. It may not be a direct business expense, but can still apply and be reported as a expense on your self-employment income. So if you are having your tax return prepared and you're not having conversations about that or submitting that information to your tax preparer, then I would make sure to bring that up.
Right. Yeah. Yeah. So, Taylor and I were talking before this episode, and one of the bigger pieces when you go into the 1099 space, contract space, self-employed space, is there are different new avenues for retirement savings. And what we decided is we want to do a follow-up episode from here because it'll take us another 20 minutes to walk through the various types of self-employment retirement vehicles that you could set up. And so we are going to come back with a whole nother episode, not too long from the launch of this episode itself, to help you to kind of carry on the conversation of, hey, I've got my 1099, I've got my did I set up an LLC? Did I continue as a sole proprietor? I've got that stuff figured out. I've figured out my quarterlies, and I'm generating income now, and I need ways to reduce my taxable income through some tax deferral and different types of saving vehicles like I had with my W-2 employee. So we're going to spend an episode on that as well. But the bottom line is uh, this can be a confusing space. It can be something that a lot of people work 30, 40 years earning a W-2, and then they transition and they just don't know how it works. The nice part is with Taylor on our team, we're able to help people navigate that transition, and she does it all the time, every single year, because it naturally happens in the world that we work in. And so, if you have questions around this conversation that Taylor and I have had today, or thoughts or concerns or anything like that, or you're dealing with something that you'd like more guidance on, this is a big part of what we do as true holistic wealth management. We don't just manage assets. We don't just help with the investment side of things. We help you think through everything when it comes to your retirement life and your retirement success. So, Taylor, thank you again for hopping on here today. I think this one's going to be really valuable to our listeners.
Thank you.
All right, everyone. We will talk to you again next Monday. Thanks for tuning in.
If you would like to find more information about Peace of Mind Wealth Management, we invite you to visit our website at pomwealth.net. If you go to the contact page and contact us, we'll send you a free copy of our book, The Peace of Mind Pathway. It lays out our process from beginning to end. Please visit our website.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.